How's it going, everyone? Today it is Monday, April 15th, 2024, and this is the video for today. So let's take a look at our picks from the last video. So I called out two picks that I liked on the 12th. So I'm going to first zoom into the market price action on the 12th. So that's what we had. The first pick, both day trades, was Nike. So when we had the video come out earlier in the day, Nike was looking nice and strong while the market was looking strong. We had this decent pullback, double top, and then you can say, well, what happened? Market had a bearish trend day. So I did not end up putting on Nike because if you remember on this bounce here, we saw this bounce at the support level, and I said I like to see the market get above VWAP, right? If it can get above VWAP, then I feel great about Nike long. So this is at 1150. Nike had pulled back, confirmed this test. It was right here. So it was setting up pretty well, but the opportunity never materialized because we did not get the move above VWAP and we never had the trade on Nike. So Nike was a no trade on that one. So a lot of times, right, especially in day trading, I can't, manage it video to video. We'll have to take a look at the setup, and then we'll evaluate the setup in the next video and see how we did. So Nike was a no trade. Adobe was one that we took as well. So it broke through this compression over here. A bit of a choppy stock, but certainly a very weak and weak D1. And we liked Adobe earlier because it had this relative weakness while the market was moving up and trying to fill in this gap. So we like that. So when I took Adobe, I took the short as in made a low of the day right around here, around 1235. And I'm going to explain kind of my thought process behind this before we get to the market pick. So we know that on Friday, let's just take a look at the D1 quickly. Market had gap down and we were by major support right here. This had held. So we wanted to see this support level hold. And I expected it to because both sides have been stubborn. There was a bearish bias over here. But I'm not going to wait for the support level to be broken until it is actually broken, right? So you can see here there's lots of support at this range. And then we tested that range over here on the open. We bounced off that. And how we bounced would determine really how the tone of the day was going to go. So there was a shorting opportunity here from here to support. So there's maybe some money to be made on that move, but I didn't get to the market at that time, so I didn't really trade that move. Next move is we had a tiny bounce up, and then we had a long leg lower. And on this leg lower, we broke the support, and I had to be sure that we confirmed this break, because if we just poked through it, let's say we poked through it here, right? We're at the support. Let's say we poke through it. And then as soon as we poke through it, we get a long bearish engulfing candle, right? I also want to watch out for that because that would tell me that, okay, we just kind of triggered some sell stops and then buyers are shooting it back into the range. So I want to avoid that scenario as well. So we get this long red candle here and I enter at 1240 because at this point, if we had selling pressure or so a bullish engulf, it would have happened pretty soon. And we've held all of these gains so far. So I was like, let me take a starter position here. So I entered at 1240 right here, right at around 469.54. And the setup on Adobe was not bad. It was okay. And it was okay because it didn't really sell hard with the market here, but it was weak earlier. So I was like, okay, well, maybe there's a chance for Adobe to regain some of its footing. I think the better entry point was maybe somewhere around here, around 1210. You could flip to a starter short, but it's tricky because we have this support level here. So you would have to basically bet that this support level is broken or it's going to be breaking down. And even if we bounce, that you can get out of Adobe for a very small loss or even a scratch. So that wasn't quite the bet I wanted to take. So I waited for some extra confirmation. And we held this move, we probed lower, and then we were hitting the 50 SMA right around here. So if we go back to the D1 chart, the 50 SMA this low was, 50 SMA over here, 509.71. So we have to be careful at these D1 SMAs because I think there is a higher chance for an intraday reversal off here. So you don't predict it before it happens, but I think this is one of those cases where that scenario has a much higher likelihood of playing out versus a scenario where we just have clear skies, because the only thing that's really going to change is when buyer feels that we've reached a good price to enter at, right? We've reached a sufficient enough dip. So when I got over here, it was let's see, 509.47. Market was pretty low. And so Adobe hadn't really produced with the market. It was doing okay-ish. And what I thought over here was, look, I got an Adobe. The entry was okay. Let's go, where am I at over here? 125. So where is one? Yeah, so I exited right here. And this is my thinking. Because my entry wasn't great, I didn't have a lot of cushion on the trade. So if we do get a sharp bounce on this stock, Adobe does not have any price cushion, right? So I took a 50-cent win, a tiny win on Adobe, because it didn't really move how I wanted to do. I wanted to see it really regain its footing and get some nice relative strength. That means I know, one, I have price cushion, and then two, I have a time cushion because this stock has really responded to what the market was doing. This market move wasn't very strong, and I needed to see a stronger move in Adobe. You can also see it gaining relative strength over here. The blue line is the relative strength of the sector, so I like to have them both go on. Usually they go together, so it's nothing crazy. But, occasionally you'll see some sort of, I don't know if we can find it in the chart here, but maybe you can find some sort of divergence, which just tells you that, hey, in this case right here, it's like, look, this Adobe's going up. So it's strong relative to its sector, but it's weak relative to the market over here, which just meant that the market was moving up, but the sector was not strong relative to its sector. So it means that the whole sector was moving up. So it's still a decent long over here, but something like this where it's like, hey, now it's strong relative to the stock and its sector. So this is it's really isolating and separating itself from the pack. And a move like this, the pack is separating from the market, but it's not separating from the pack. I think that's the best way to describe it. Anyways, so we got it over here, and it ended up being a great exit. So I was right. And I was like, look, so we got a decent bounce. And honestly, the market bounce was not that strong. So if it was relatively weak, I could have stuck in the trade. But the Adobe bounce was very strong. So I was glad I got out. And I told myself, look, if it ends up regaining its footing and it breaks the low of the day, if we have a nice late day compression break, I can re-enter the stock and get in. But I didn't have quite the same risk reward profile. So Adobe was a win. If you took it earlier in the day, so maybe you took it at 10:05, maybe you took it on the fail of this red candle over here. So 10:25 was another decent entry point. You could get over here. We broke through here, retested it, 10:25, 10:30. So over here, right, this is a much better entry point. And if I got this entry point, I think I'd have a little bit more latitude to stay in the trade. But it lost relative strength, right? There's a lot of bias here. Didn't quite move down with the market. Let's get out of the position and let's find a stronger horse to ride. All right, so let's take a look at the market today, and we will see. Let me just get my pick set up over here so we can look at what I can keep track of what's going on with the trades. Okay. So let's take a look at the market today. Long-term fundamentally, nothing has changed majorly. And I've kind of reorganized how I do my fundamental bias. So I've kind of categorized it with bullish forces and bearish forces. So I have a lot more bullish forces coming on my long-term fundamental side. Inflation's coming down. Earnings have been pretty good. There's good positive earnings expectations. There's low recession risk. There's low credit crisis risk. There's a lot of broad-based market participation, and other sectors are catching up to the Mag 7. We also have AI as a buzzword that's driving the market. And the caveat is that we need more commercial adoption to support some of these valuations. One great resource that I've been liking, and maybe I'll pull this up very quickly to see. I really got to change this load screen here. So I've been reading this site, JPM, and they have something called, they have kind of these market, so let's go to services, insights, I think, markets and investing. Let's see if I can find it. Yeah, I think this is kind of it here. So this might not be the exact one. Wealth planning, maybe latest and featured. Eye on the market. So they basically have a lot of these articles, and maybe I'll try to find the link and put in the description. Where, yeah, so this has a couple of things here, where they basically talk about different things in the market, and I think they give a pretty good idea of the macroeconomic backdrop. So for example, this is a paper where I got this AI buzzword. Like, they do a lot of analysis, right? Way more analysis than I can do, and that I even had the expertise to do. But again, it gives you a sense of just what are institutions thinking. That's really the fundamental backdrop here. What are they thinking? What are they looking at? So I have some sense. I have some theory in mind into what they want to do. And I always lean on the price action. So price action gives the institutional bias, but I think the advantage of the fundamental backdrop is that this is the only instance where I'm using fundamentals to get a sense of where the price action might go. So it's usually price action, and then you confirm it with the fundamentals. In this case, what I'm doing is, what are the fundamental things that can change the price action? So I'm not saying do news first and price action second, but what I'm generally saying is, like, look, if rate cuts are a big news item, if Jay Powell on the May 1st FOMC meeting came out and said, look, we are going to have 5 rate cuts this year, I think the market's going to go up, right? So I think that would be a bullish scenario, and it would make sense, right? I don't know for sure, but I think understanding that helps me gauge what's going to go happen in the market. On the bearish side, we're watching China. There's a real estate bubble that's going to show cracks, and there's some positive stuff now, and then I think more stuff is going to continue to surface. The other thing is that the rate, timing, and count have been pushed out, and they've been reduced. So I think that's why we're seeing some of the selling over here. Market had very, very dovish expectations, and now they're sort of adjusting to that expectations. The main thing I saw is that the likelihood of 2 to 3 rate cuts before the CPI number was 43%. Now, after the CPI number, it is 63%. The chance of having 4 rate cuts, the market was actually pricing in a small chance of 4 rate cuts. That's gone down. Chance of having no rate cuts this year has actually gone up slightly. So just shifting its revision, it's revising its expectations down to meet and match the Fed rhetoric. There's some other neutral things over here is that, one, the EU is flat. So, there's not a lot of GDP growth. It's not hurting. It's not helping. It could be boosting up in the next session. So something to keep in mind. There's also the election year, which I think is also neutral. And again, from the GPM report, they did an analysis where they said, look, stocks tend to perform the same in election years versus non-election years, and the times that are outliers are not attributed to election years. They're attributed to other macroeconomic events. If you look at Obama-Romney in 2008, there's a credit crisis going on. If you look at Biden-Trump re-election in 2020, you had the COVID crisis and the response happening over here. So really, the election doesn't have that much to do. The main thing you would watch out for is when we get close to the election, there's uncertainty, so you may see some risk off and a little bit of selling pressure. After the election, when the uncertainty is reduced, you may see some more buying. So that's kind of the seasonal change I'll watch for, and that's going to be more in October and November, in September, maybe September, I'm not sure, but something to keep in mind for later. Okay, long-term market buys. I'm still technically on a long-term mildly bullish. I'm a 1 bullish. What would get me, now this is where I'd say what would really cause them bias to change on the price action side. Well, if we get a very deep retracement, right? We're talking like, hit the 100 SMA, get some heavy volume, some stack red candles. If we get a deep retracement like that, and we get a wimpy bounce, that would get me pretty bearish. The deeper the retracement and the stronger the move down, the more bearish my bias would be. In this case over here, I'm still a little bit bullish because we have a mildly, so far it's been a stubborn move down. Buyers have been in here. So we find some support. We get a rally into earnings. We get a bid into mega cap tech earnings. We could get something very, very nice on the upside. So that's why I am mildly bullish right now. We've seen selling pressure on a longer term basis. Let's look at like a weekly chart, right? On a longer term basis, we have a strong trend, and then here is a pullback to the strong trend. You could say it's a pullback to the 8 EMA, right? And I'm not really making any crazy justifications on the weekly chart, but the zoom out really does help us gauge, what's happening over here. We know at the very least that we're going to get a double top, and we're reducing a lot of our short risk or a long swing risk over here. And we're playing it on a much shorter term time frame. That's kind of the trades that we're looking at. Now, similarly, if you get a wimpy retracement, let's say we hold the 50 SMA this whole week. We hold the 50 SMA, we test, we can't break through, and then we get a strong move up. That would get me a little bit more bullish. That would maybe get me to a 2 bullish, right? And especially if you break to this upside, yeah, then I would for sure get more bullish at the short term, especially because we are really starting to move higher. I don't know what this is. What is going on over here? Huh. An OP1 OP. Okay, well, not as wonky anymore. All right. So that is what I am watching for, and some technical things to watch for. It's like, look, we're spending more time below the AVWAP-Q, so that's bearish. More time below the 8 EMA. That's some relatively easy signs to see that we are more on the bearish side. The more time we're above it, we are much more bullish. Choppy price action, and we haven't gone anywhere in about a month. So that's why we are less bullish than we were before. And remember, we were a 2 bullish until we saw this red bar, and this put us on a 1 bullish. This is a caution sign, slow down, exit over here on this bounce, and then we're going to get ready to, see what happens. On the shorter term market bias, and looks like prices, maybe we might get some nice move over here. We got to get into this pretty soon. So shorter term level, last couple of weeks, we are in a wide, choppy range. So you can see here we have this downward sloping wide bearish range on the H1 chart. Again, institutions don't trade the H1 chart. It helps you just structure what's happening in the trades over here. So definitely a pretty big bearish channel. And that's why when we get these big moves up and we don't get any follow through, we can fade them because we're in a nice entry point in this channel and we have a nice favorable risk reward ratio. So market is right now around the 50 SMA. It's probing this support level over here. Looks like we could get a move lower. That's what's setting up over here. We're gonna get to that in just a second. But at least in the short term right now, we don't have to worry about any sort of capitulation. We don't have to worry about the bottom falling out right now. I think it's a slightly more elevated than usual than what we had in the past couple months, but I'm still not worried until I really see some strong selling unfold. So we have these drops and we have these bounces up higher. So we're trying to stay balanced, and I think maybe it's slightly more favorable to the short side in the shorter term trades. So I think you can take some deeper, some CDSs and PDSs have been working pretty well. Let's talk about support and resistance for today. I had support 1 at 512. So this is the first level. So minor support right around 512, and you can see that's where it came into effect, and this has been a fairly significant support level for the market. Looks like financial stocks are getting pretty weak. The other thing was 510 around the SMA, and now we're actually breaking through this SMA here. So we're breaking through it. We might get some follow through over here. So we're keeping an eye out on what's going to happen, but this has a chance to get some very nice follow through. Let's look at what's happening today. So early in the day, finance was pretty strong. They might be flipping right now. Healthcare was pretty strong. Energy, oils, utility were up. Mega cap tech was doing pretty decent. There was quite a bit of general weakness, quite a bit of market breadth on the weak side. But there's some more stocks in heavy buy than heavy sell. So my market components coming into the day was a little bit more neutral. There was some stuff I saw on the long side, some mega cap tech strength, some decent, other tech stock strength. But there's also a lot of breadth of market weakness, so those things are going to sort of counteract each other. Now let's finally zoom into the intraday. So our short-term market bias, let's recap everything. Long-term fundamental is a 2, long-term technical is 1, short-term technical is a -1. Now what's our intraday bias? Get this gap up, and we're holding this level on the bull cycle here. We get this 1 OP bearish cross, and then we get this first leg lower into the gap. So to me, I see this and I'm like, all right, I'm a -2 bearish. I love this setup. Excellent risk reward profile. We have the gap to fill, and we are entering starter position and we're looking to add. So we have this move over here, and I'm already pretty bearish. So we got some heavy selling to start the day, and then we do fill in the gap over here right around 11:20 or 11 o'clock. Now, this move down to the gap has been pretty stubborn, and we get a pretty tall bounce. We're unable to capture VWAP, and then we get this next leg lower, try to bounce again, and then we get this other next leg lower. And now I'm really liking what I'm seeing in the market on the short side. Now, after this, I didn't think we would actually fill in the gap, because on a stubborn move like this lower, we tend not to have a gap follow through. If we got this strong, right, we got strong long red candles through the gap on the open, we attacked it pretty fast and pretty strong, then we could actually have some momentum, because sellers can really overwhelm any buyers at this area. A lot of stocks might be breaking down over here. So if we got this sort of move, right, you take this, copy paste it over here, we break this, yeah, I would expect to see some follow through on that. So we got a bounce, didn't materialize, and now we're getting this same leg lower. Pretty similar day, I think, to yesterday, where we have this, instead of a gap down, that we had a gap up, so it's a much better risk reward profile. We get this move lower, we get a wimpy bounce, doesn't materialize, we get this move lower, and then it's going to have some follow through, and then we may die later in the day. There's big chunks down, tall bounces, big chunks down, tall bounces, so you want to get in on these bounces. You know they're going to happen, and they're a lot more better setups I'm seeing on the short side than the long side. So I'm also going to get rid of these, this line over here. And just to clean up the chart a little bit, we have some support. I drew this. This is a 50 SMA over here. That's coming into play around 5, 10, 20. So right here, right, we're at the 50 SMA. It seems like we are breaking through that intraday, so that is important. So right now, I would say my current bias as of this price action here is certainly a -2. I mean, it's pretty bearish. We have some bounces, but it seems to be getting much more bearish by the moment. So this could even be a -3. Now we're going to look at some picks on the short side. Let's see what is really happening here that we can enter. So I'm going to show a couple of ones that I liked. And also first, one on the long side, by the way, I'm really liking Coupang as a long. So it's not the right time to go long in the market, but I would say if we get some kind of strong snap move up over here, right, we're able to get back close to 512. Yeah, I think Coupang could be a pretty nice buy. So keep an eye on Coupang. I don't think it'll be my pick just because this is looking a little bit more bearish than I have anticipated. But this is certainly a very, very strong stock, and I'm going to quickly outline why. So Coupang, excellent move up. We held the gains on a down market day, so that's very nice. It was at some major D1 resistance, right? And let's talk over here, right? We had a lot of heavy volume candles at this level, and it was in this range for quite a bit of time, right? Long range over here, very, very, very long range. So we broke through here, and I had to make sure that we actually confirmed the breakout. So we broke through here. There's some high plus trend lines in the way. I'm not super worried about that, in my opinion. I don't think that is kind of the main reason at the moment. But we had this long green candle. We came back and we tested it. And this test was key because this actually tested the D1 support level. So now we tested it, and we're bouncing off, and we're seeing buying. And the clue is that this buying is coming in during a time where, if we look at the market has been selling off strong. So let's put in the SPY overlay so we can see this here. Market has been absolutely tanking from, let's see, 1155 all the way to 125. Absolutely tanking, right? This is some pretty nice selling. Coupang has been completely compressing. A lot of buyers at this level. That is very, very nice. We don't have the market confirmation to quite enter the stock just yet, but if we get any sort of strong snapback move from the 50 SMA, if buyers feel that this level is, a sufficient level, I really like Coupang on the long side. Coupang? Am I saying that right? I was saying it wrong the whole time. Coupang. So I'm going to outline Coupang. I like the CDS here, so what I would do is, here's how to take the trade. Depending on how it sets up, you could take the CDS here. I take the 2150, 2250 CDS for a debit. You could probably get it for a 43 cent debit over here. That puts you right at this range. And whereas the 2150, it's right at this support. So this is a very nicely structured trade. If it breaks through that support, it's right below your short strike. Easy way to get out of the trade. So that would be my Coupang CDS 25. But again, just don't enter right now. Remember, right? Like, stocks can only buoy a strong move for so long. If this picks up steam, Coupang will sink, right? And so it's not we're not quite setting up as strong as we need to be. So what's nice on the short side? So one move I really liked that was called out in the chat room today was Snap. And here's why I like Snap. So very long compression. We do have some time before earnings. We got about 10 days. Broke this compression over here. This is a very major level this morning. We also had this minor level on February 23rd. I don't think it's super strong, but I want to keep an eye on it. I really like to just have completely clear skies on a stock like Snap. So we have lots of room. I don't see anything really major over here. Maybe something like that. That could be something potential to consider. That could be your next minor level of support and resistance. So we definitely have some room to that level, especially a stock like Snap. Yeah, 1010. So you could take the 1050 $10 puts. I think that's a nice setup. Got a lot of market momentum and a lot of Snap momentum. So that may be my pick of the day. Let's look at some other ones that I had liked earlier. And I'll talk about one day trade I traded before I... Oh, nice. ANF. Oh, yeah, ANF's doing pretty well. I took that short on Friday. So here's one trade I really liked, and I'm going to point out this day trade that set up over here. I'm working on categorizing some nice day trading setups. So let's talk about this day trade, and let's see. Yeah, market's overextending here a little bit, so I'm going to wait for a weak bounce, then we can get a nice shorting opportunity. So while that happens, here's a setup. So market 1005, gap up compression, and then we break down here. So let's start with Sentinel. Why do I like Sentinel so much? And I'm going to walk through the play for the trade. So Sentinel, weak stock, compress here, and broke through the compression. We broke through it right around here. We broke through it yesterday, and today we confirmed the break, and we started to move lower. And immediately what I liked was this long red candle on heavy volume below the prior day low. We came back for a test of that low, and then we started to inch lower. So when S confirmed below VWAP, I entered the trade right here at 10:05 at 21.39. And now you could say, well, look, it's not that relatively strong. It should have really been going down. Yeah. But this is the setup I like. This early bid check and no gap means that the stock has plenty of room to run. And I know that we have heavy selling on the D1 chart. So market's moving down, and I'm staying with S, and you can see it's making a new low of the day, which I really like. The other thing I have to see is I need this market to break through this halfway point of the gap, which is this 512 level. So it breaks through it right here. So I'm in S. I entered at here, 10:05, and then I added at 10:35 at 21.07 because the market made new low of the day. I like the relative weakness in this stock. So this gap fill is getting stubborn, and I know that S is not going. I don't think the market is going to continue past the gap fill at this point. So we get this test here at 11, and you can see that S is starting to lose some steam here. It's compressing. We have this gap fill, and I take profits at 11. I take profits at 21.05. So I get a really nice chunk of this move. The market does have a bounce higher, and you can see that this stock has a pretty tall bounce to VWAP, and now it's starting to sell off again just because the market is going down lower. There's potentially another entry point over here, and you could ride this for more, and you can say, hey, look, you could have really stuck in this trade and gotten a whole bunch of more money. I could have, but if this bounce materialized, I would have given up a lot of profits on S. So to lose relative strength, we are by some D1 support. We're close to the SMA. Let me see what happens, right? I'm not going to take all my chances here on the SMA. So that was a nice day trade win on S. I'm also going to talk about a tiny day trade scalp loss I took in Schwab. So after this weak move down, I thought we're at the gap fill. We could see a nice, decent bounce over here. So market was bouncing up higher. I like these green candles. We were holding the level, and I saw Schwab. And let's look at Schwab over here. So I took Schwab as a tiny scalp. First, I sized it much smaller. Second, it was over this major level, right over here, around the this compression level. Actually, I think I missed this compression level here, but we broke this level, and we also had this top range of the high plus trend line. So it was a good setup, but not the best setup on the D1. Not a ton of clear skies. But I like the strength of the stock. It held the opening gains of this candle. Weak pullback, long open, again, above the prior day high, and we had strength during a weak market. So when it broke above VWAP, I took this trade at 72.89. And the thought process of the trade is I'm going to exit at VWAP if it hits VWAP, or I'm going to take profits near the high of the day because we have some D1 resistance overhead. So this was a relatively strong stock that I'm going for a scalp with a 1-to-1 risk reward. So as long as my chance of probability is going to be over 50%, this is going to be a positive expected value trade. I knew that we have a bearish trend day, and I'm not here to overstay my welcome. I need this move to produce in the next 30 minutes, and I expect it to. So it's moving. Schwab is kind of just compressing over here. It's holding gains, but it's not really moving higher as the market's moving higher. So that's my clue. I have a time stop on this, and at 11:40, I needed this stock to make a move within 30 minutes. Get a long red candle here, test this level, I get out of the trade. I take a 30-cent loss on like a 1/6 size position, right? It's very, very small. And I'm okay with that because I knew that this would be a nice gain, and if it didn't work out, it would be a tiny loss. If this move materialized and we really started to take off, then I could add, but I was not expecting to add. So that was the other day trade I took. So anyways, those are the two setups. I just want to highlight them to the day. The day trades are slowly getting better. I quite like Snap over here. And let me take a look at let's take a look at the bearish side here. See what's really moving today. So this is my in the money puts. So these are weak D1 charts with low IVs. So you can see what's really moving. Oh wow, Mondel's is really getting. Mondel's might be my pick. I'm gonna take another look in a second. Gills, Starbucks. Yeah, there was certainly some weakness over there. MCD. Breaking that compression, CLX. A lot of staples coming up over here. A lot of defensive, BIIB. Lulu, a little bit overextended. ACN. Yeah, I like that hammer. It's a nice looking hammer. MO is not too bad. NLY is nice, but it's choppy, so you could maybe day trade that. KVU. Oh, our good friend Alta. Let's see if it's making a move here. Hey, look at that. There's our good friend Alta. Okay. So it broke through this level. My alert did not trigger. So let's take a look. Finally, broke through this level. So let's see. This low was, let me just put this on the chart so we can see. Broke through this low of 43.50. Nice, we broke through here. I love this. Volume is okay. This is actually a tall volume bounce. It's been pretty relatively strong. So not as crazy about it now, but it is an excellent D1 setup. So a lot of stocks are going to be strong during a market move like this, except very, very few stocks are going to be relatively weak. So yeah, I'm going to wait for this pullback over here. Long move here, really rising and spiking R of all. So this is going to have some continuation. We just want to make sure we don't break any sort of bearish, have any sort of selling climax. That's the one thing I'm watching out for. But certainly, even if you're short now, you'd have time to get out, in my opinion. Yeah, this is pretty nice. A little bit choppy. You could probably short shares. I think I recommended, what did I recommend? The 430, 440, 440, 430 PDS. Broke through here. We do have some room for 430. What's going on over here? I want to have this gap fill clear. This high 427. Okay. So you can, I think I'd maybe shift it to like a 435, 425 PDS. if this is going to load. So let's see. April 19th. Let's look at the 435 and the 425 PDS. That's a pretty nice debit. So you can get in here. Debit's a little bit wide, but you can get in here for like what's the halfway point here? Maybe like 380 you could get in at, which is well below the halfway point. And yeah, you can target. You can get a nice $6-7 move, which is a pretty good half ATR move on this stock. So yeah, I like an Ulta PDS. There's some really nice shorts setting up here because we're getting this technical breakdown. So 435, 425 PDS. I like that. And the other one I like is Snap. I really do like Snap. I like this Snap. The 1050 10 PDS. Let me check this. What's going on over here? Let's see how this is looking. So buy the 1050 puts, sell that. You can get a pretty decent debit on that, or less than half. So you can probably get a 20 cent debit, 22 cent debit on that. Looking pretty good. So what would I do with these PDSs? Well, we got a long move here. We know there's been choppy bounces. Actually, this bounce has been pretty weak, and we've got a really big crackdown over here at 506. This is certainly some nice bearish momentum. So I want to, yeah, I think I'm going to wait for any sort of tiny bounce here. See if I can get a nice little good entry point on this stock. So it pulls back over here. And then I'm going to get in on it. And I really like this move down. We've really broken through this level. And we are looking at, yeah, there's some minor support here at 504. But, yeah, I mean, selling pressure is certainly picking up today. And I think there is no joke for that. There's no joke for that. So I'm favoring more of the short side today. So yeah, I'm going to go with the Ulta PDS and the Snap PDS. And here's the one I want to see. I mean, I think the market there's a very high likelihood it's going to close below the 50 SMA. Just wait for a bounce short. I think this sort of selling we'll see follow through selling over here. I don't think bulls are going to quite throw in the towel, but I do think we're going to get continuation on these moves within the week. And I'm keeping it short term within the week because, again, we have the bid into mega cap tech earnings. The PDS helps me reduce my risk and structure my trades quite well. So those are your two picks. Again, now in the small event that we get a crazy bullish hammer off this level, right? Oh, there we go. Lost stocks breaking out. If we get that move, then you can get Coupang CDS. But if not, hold on it, right? Hold off. We're breaking through some technical support. When the market is ready to go, Coupang, we'll take a look at Coupang and we'll see how it does. So we're just gonna keep an eye on this. But yeah, Ulta and Snap PDSs those are your trades for today. Thanks for watching, everyone. Hope this was helpful, and we will take it again in the next video.